What's happening, guys? Another Sunday scan coming at you. This time's for May 24th and the week ahead. I know it's starting to get nice out here, and I know the attention span is going to be a lot shorter. I know mine is. It's nice to get out there during the weather, especially if you live in New England, where it's not always this nice. So we've had 80, 85, almost 90 degrees a couple days in a row, and it's been the first weekend like that since winter. So I know it's a lot to ask you guys even to come out yesterday. So I wanted to say thank you to those that participated in the Traders for a Cause event. It was a big success, and I think you're going to like what you see, especially when the projects start to begin, which I think is starting either next week or the week after and should be completed by June. So I think that's going to be great to watch the progression and see exactly where the dollars go for the case of building dreams for Marines. Obviously, we had a couple beneficiaries, but once again, thank you guys for participating. As promised, I did pick, or I did randomly select a winner for an annual subscription, and I said I would announce it today. So that is David Freed. If you want to email me, we'll go ahead and get that set up, as well as those next 20 people that donated the $150. You'll all be getting a t-shirt, so I'll have Zach reach out with a questionnaire kind of form for your address, and we'll send them out. But a big thank you to Zach and Jill for emceeing the event and doing a great job with it. And also, Zach's doing a phenomenal job with fielding or at least giving softball questions, making us look good with the podcast that he started. So if you haven't seen that, check it out. He's been working hard on the Traders for a Cause podcast. We can include a link in the description as well. So let's get right into it. Friday was crazy, and there was a little bit of FOMO on my side. I'm not gonna lie, but you know what? I'm gonna play both sides here, right? So ANVS, the goal out of the open was ideally we get some sort of trap under $35 per share, and then rip towards 50s or higher. It was that sort of trade. It was that sort of market where sometimes we see these types of moves. And, then we end up having these crazy moves. Did I expect 90s? No. Did anybody? Probably not. Otherwise, it wouldn't have gone there. But the point being is being able to understand what a trap looks like, being prepared for it, and what the potential range is. And then, most importantly, not exhausting out too soon. This is a perfect example of an outlier trade that could end your trading career. Right? By adding. And we all do it. We've all done it. But it's just whether or not, you've learned from it. And, you can probably name those big trades that was a close call, was your biggest losses. You still remember them like yesterday. But it's what you learned that day that you applied to your trading today that keeps you around. And, I think that there's always those types of trades that are going to sneak up, and it's just whether or not you learn from that prior mistake. So, unfortunately, I'm sure there was a lot of people that did learn on this trade and did step in front of it and did add to a loser, and then you end up getting blown out when that was the exhaustion point, and that was probably the very best short all day. So, like I said, I did have some serious FOMO. I'm not going to lie. I made a goal in 2021 to get off desk sometimes, and not always have to be pushing buttons. And if I have a fantastic morning, all week last week was amazing. And Friday was just huge out of the open. ANVS long, then got a partial short on it, and, worked out super, super well. So why am I staying around? It's going to be 85 degrees, etc. So that was my goal in 2021, and yeah, I'm driving up north, and obviously I check my phone, and I see that I missed, $30 per share more than I took from my 91 average short. It is what it is. There's always going to be another trade. We're always going to be able to play that game, and it is what it is. So for me, I'm happy that I took that time off. I'm happy that I'm actually following through with a resolution. I'm sure many of you have already broke your resolution, and including myself, I'm sure, on many different things. But I'm trying to stick with this one. I'm trying to make sure that I make that an important thing, especially this summer, so that I don't turn it into just another summer that goes by and, I'm behind the desk all day. And the other thing, too, playing the flip side of that is what if? What if I decided to stick around and it didn't stop at 80, and, when I covered into the 81, 82 flush or whatever it was, and then it went back up to 85 and 90. Did I stay around all day for nothing? So you got to play both sides. And that's a rare unwind, a rare squeeze and a rare unwind. They're not always going to do that. And a lot of times, had I stuck around, I probably would have been chopped up and I probably would have been, stuck in some $5 pattern until the end of the day. So, it is what it is. And I'm just happy that, there was such a big move. There's going to be so much momentum off of that. People thinking that this is the next ANVS for at least the next week or two. So a couple things that I want to talk about today is move in, move out, and move on. And that's been my strategy for most of leading into the spring, summer months. And I don't want to beat a dead horse. Everybody's saying it's slow. It's not. It's just whether or not you've adapted. And so my current strategy is looking at the biggest moves and what has the most volume, the most liquidity, the most overextension in the dailies compared to the prior days. And those are my targets. Those are what I'm looking for to exhaust traders out and then start to participate. And we've got plenty of those. We've got NEO and Plug. You had AMC. You have OCGN a couple weeks before. I mean, it's just countless trades each and every single day. But the key is move in, move out, and move on. What happens is if you zone in and focus on just one ticker, you're going to get chopped up, right? So for me, I just cycle through these names as they set up, go for it, let them do their thing, wait for the next setup. Don't keep going back to the well because you will get tunnel vision, you'll have your blinders on, and you will get chopped up. So wait for that setup. There's a lot of different things that I watch, but the main thing is it starts to speed up relative to the prior price action, and it's got intense liquidity, volume. Had to make sure that Beckett was still there. He's fine, by the way, just in case he doesn't move for a while. He's just sunbathing. So again, just to re-hit some of the points from prior scans, and I think that they resonate with people very, very well based on some of the feedback that I get on the videos and the aha moments and the DMs and the comments that I get. I just wanted to hit them again just because I feel like if you apply it as soon as tomorrow, you're just going to become a better trader. So whether you had a loss last week, whether you had a loss Friday, whether you have a loss on Monday, whatever it is, don't change just because of that loss. Go back and keep doing what you were doing when you were trading your best. If you change what you do just because of a loss, you're going to try to start making things back. You're going to start over trading. You're going to start to do things that you normally wouldn't do. When I am trading my best, I am trading less. I am sizing hard into the winners. I am taking gains, and I'm not trying to get back. Trying to get back is those famous last words. I just got to get back to here. I just got to get back to here. Guess what? When you try to get back to here, you end up here. Okay? So you need to really focus on just doing what you did to get here, and you will end up here and here and here and here and keep on going. Okay? So when you always try to get here, you end up going here. What are you good at? One of the most popular questions that I get from new traders is, I have a small account. What setup should I do? What setup should I trade? And the answer is paper trade. Try them all. Figure out what you're best at. Because it doesn't matter if you've got a couple grand, a lot of grand, or a huge account. It's all the same. Same conversation with questions, commissions. What about commissions? Should I go per share? Should I go flat fee? I've been trading well, but the commissions are eating things up. Whatever. It all comes down to the trade at hand, right? And if you're trading well, all that stuff doesn't matter. As long as you're taking the proper trades, you're looking for the proper range, you're looking for the proper opportunities, all that stuff is just the cost of doing business. And a reminder that, you don't always need to think about commissions on the exit, right? So a lot of people are, I want to add liquidity. How much did you lose by waiting to add liquidity? Meaning sitting on the bid, waiting to fill instead of swiping the offer, right? And I think that if you go back and review your trades, how many times you were too cheap to pay that ECN fee, $5, $10, $20, and you ended up losing 200, 300, 500, 1,000 or more, right? Probably more. So I would just kind of think about that with the trades that you're taking, and make sure that if you want to be out, be out. If you want to be in, be in. Because also on the way in, if you're trying to add liquidity, if you're trying to get that fill on the bid side or the offer side, you missed the trade, what was your opportunity cost? And you're just trying to save a couple bucks. ANVS still thinking that they possibly sparked some of these bio-type names. And last but not least, I just wanted to hit upon AMC. It's probably the most loved name out there whenever I tweet it. But no, on a serious note, I think that the reason why you get so much feedback on Twitter, right? So usually I put out a thought on particular names, and I'm not always going to be right at all. But when I think that there's a better or a higher risk on one side than there is the other, or when I think there's a huge trade opportunity coming, I post it. And I post, that I think it's coming very soon. Whether it's the day before, that day, whatever the case may be, it's because it's nearing an inflection point. It's nearing this exhaustion, this peak euphoria. And it's just like the market, it's just like Tesla, it's just like Apple back when they had their huge runs. It's no different than Riot. And AMC, I compared it to OCGN. If you go back through OCGN and watch how it traded the day before it unwound, we saw the same thing on AMC. And everybody's waiting for the squeeze. Everybody thinks it's going to be like last time. But they don't understand. Yeah, sure, it could happen. Look, I'm not ruling that out, that it could have happened. And that's where risk comes in, obviously. But the reality is that the squeeze actually was happening on that breakout. And so what I mean by that is basically transfer of wealth, transfer of shares. The covers are coming in as the exits are coming in, right? So although it may not look like it's, a low float squeeze, yeah, it's not going to be one. OCGN is not low float. AMC is not low float. But it's that transition, that day that it just does not downtick. It's just way too strong, way too much buying. Yeah, that's all the covers rotating into all the exits. And because of that, it may have not looked like a squeeze, but it was the squeeze. And then obviously we got that nice unwind that we were super prepared for, which obviously worked out extremely well. Let's see. And I wanted to hit upon the HODL theory and the us versus them kind of mentality. And unfortunately, a lot of shareholders will learn the hard way. AMC and all of these others. But, in the end, like I've said before, supply always wins. Supply always wins. So, yeah, you can take the stance, you can fight the hedge funds, you can fight the shorts, you can fight this, fight that, but look at Clove. Look at all these different names that have just unwound because they're retail heavy. And the ones that have the emotional shareholders is because they have the most retail kind of spelled out story. It's been sold to the retail, right? The story has been created to attract the masses, and it has, and that's why they have such cult followings. And when you attract such masses, you're able to sell a lot of paper for an overvalued price. And in the end, supply always wins. So be cautious out there. Don't get too emotional with things. I get it when I get the replies. when 1550 after hours on AMC, and I suggested the fact that we're going to have a massive trade incoming as soon as the following day, and that I felt like it was going to be a monster opportunity. And it's a very emotional time for those shareholders that are staying long and have the HODL life, and they will fight it all the way back down to $5. But it's okay. We just need to be able to move in, move out, and move on. After the next couple days on AMC, I don't care about it. It's going to go into some kind of consolidation pattern, and then there's no edge. So I only trade. My goal is only to trade when there is an edge. Everybody that leaves a comment, everybody that leaves a key takeaway, you automatically get entered to randomly win. And so this week's winners, Amanda Charles, you've got the t-shirt, as well as Ricky Analog. Ricky's a good guy. We ended up having him speak at Traders for a Cause, I think 2 years ago. He did a great job, and the point here is that he's been trading himself for quite some time. It's not about whether or not you're successful on your own or not. It's about learning from others, and I think that proves that right here. And I kind of mentioned that at the beginning of this video. You're never too good to learn from anybody else. I go and watch those Traders for a Cause videos, all these different speakers that we have, because you can pull something away from each and every single trader. As a trader, you are a product of many different people. And if you're not, then you're not living up to your potential. Your potential could be a lot higher than you think by continually pulling and taking little strategies and molding them into your own. So never stop learning, never stop educating, never stop being interested in what others are potentially doing and how you could better your own trading. All right, guys, so the downside of doing this outside is you've got to compete with the wind gusts. So hopefully it's not too bad. I'm going to try to fly through this part as well. But this is the second part of the video. This is my game plans, what I'm looking for the week ahead. Once again, it's not financial advice. I'm not a financial advisor. It's not buy or sell recommendations. It's for educational and informational purposes only. So if that's not good with you, then you shouldn't watch the rest of the video. If you understand it, you get it, then you can watch the rest of the video. One thing that I always ask of you guys is if you could like the video, that helps us, help you. And if you could leave a key takeaway. A key takeaway, you can just put the timestamp in whatever it was that your key takeaway was. It's going to help other people be able to click that button, click that timestamp, and be able to see exactly what it was. They might have missed it the first time they watched this video. So I do appreciate you guys doing that. And as you can see, we've been putting out a bunch of content based off of what you guys are tagging as your key takeaways. One important note, we'll never solicit you via WhatsApp, Facebook, Instagram. We're never going to reach out to do some sort of account management program, manage your capital, or have you, at some capacity send crypto or anything like that. So I know I mentioned it a lot, but there's always new people that are subscribing, new people that are watching these videos. So just in case you didn't know that, just because it has the same image does not mean that somebody else can't upload that image. So understand that that's not us, and we'll never solicit you for any of that kind of stuff. So first and foremost, I wanted to make one note on ANVS. ANVS, I tweeted on Friday, the line in the sand, the key level was that 87 level. So I want you guys to go back and take a look at what happened exactly when it busted that 87 level. Not just that it broke it, but that it broke it and held it, right? Because as you guys know, we talk about the reclaim, and every time it tests, reclaims, test, reclaims. But I tweeted it out. That was the key level for the afternoon. And I want you guys to go back and see what you can learn from that. I told the Traders Lounge, which is our off-topic room in Investors Underground, to check it out. Make sure the recorders are on, because if and when this thing unwound, it was going to be something to have on record. So you can go back and see all the exhaustion points. We were talking about it. You can see each time that it kind of went up towards this 94 level and exhausted all the traders out. It was it was there. It was showing you its hand. It was just about not pre-exhausting ahead of time. So, as you guys know, I was short. I did get about a 91 average or so, and I covered some at, I think, 85 and 80, 81, 82. Yeah, it is what it is. It completely unwound after that, and that's okay because I was in my car and I was on the way to the lake, so I didn't really care. I did, but I didn't. I did. UPST. This one I think is going to be a fantastic trade at some point this week. And I say this point at some point this week just because, whether or not it's going to be ready to go tomorrow, we'll see. But what I think the most important part is to look at the daily chart, look at the prior level of resistance. It's right around 165, 166, around that area. A lot of times what you see is blast through it and then comes back and retests through it, right? So a lot of people start to think that it's going to double top. And they just kind of sit there, and blow it through. I don't want to be caught up in that. I'd rather it blow through. Even if I'm shorting lower, at least I'm not trying to find the top. I'm not 2, 3, 5, 10 too early. I'd rather be 1 or 2 late than 5 or 10 too early on this thing. Or in this case, maybe 20 or 30. I think there is something to be seen here. We had the earnings. We had that transitional day that we talked about. So usually, I try to throw in something that I kind of see, or what I'd personally like to improve on. And so we had that big gap up day and unwind. It was a fantastic short. Got a good portion of the meat of that move. But then it held that daily VWAP, and then it came back. And what I'd like to do better is setting triggers, setting some type of reminder like, hey, once it busts through this 115 level, the place where it peaked out on the earnings report day, the shorts are all on the wrong side. And that was a transitional day in the sense that it was the highest volume since the last run. And there's a point where a lot of sellers come in. If they wanted to sell, they sold. It pretty much closed towards the lows. Shorts, there was no reason for them to cover. And then new buyers came in. And so now when you bust through that prior top, you have that potential for a squeeze. So that was really nice, a really nice opportunity. So again, my goal for that is higher the better, blow off, looking to trade the failed follow through momentum. Would I trade it long? Probably not. Is there a potential long in there? Maybe. Week opens red to green for a potential breakout. But for me, I'd rather just wait and prepare for some type of blow off move. F. Haven't had this on scan for ages, right? Never really see it. But it had some intense range and some intense volume on Friday. So I am interested. Hopefully we have some follow through momentum. Hopefully it opens up 1370s, rushes through 14, and then fails. 200 million shares. You can trade a lot of shares. So I like to surround myself with names that have liquidity. AMCs, OCGNs. You can get in and out with a lot of shares. That's all I care about. I want to be able to trade a lot without having to worry about all these liquidity, low float type traps that you see every single day. Higher the better. Parabolic move, sit back, let it consolidate. Move in, move out, move on. SPCE, fantastic trade this week. Can't type, there we go. Fantastic trade this week. Yeah, it has gapped up and it has already run up into this event. So has it been priced in? We'll find out. But I do think that we'll have some sort of gap just because there had to have been some price of potential failure into that. And so therefore it should technically open higher in my eyes. Whether or not that would maintain trend, whether or not it's priced in overall, whether or not it's going to carry through with the momentum or have the demand that it needs, we'll find out. But what I'd love to see is that gap up, that obvious, okay, fade the news, trap right there, and squeeze out. I'd love to see that secondary squeeze where it gaps up $1 or $2 and it runs another $1 or $2. And then I'm interested. If not, and it can't get over VWAP, can't firm up, 9:45, 10 a.m. plus, fine. I'll trade, what it gives. Failed follow through. I've got a couple names here. So I've got, these are kind of like my go-to names right now. I've got Neo, I've got Plug, Fubo, NKLA, and FSR, right? So those are always on watch, and they trade similar. And FCEL is another one too. I didn't write that one down, but they trade similar. They have similar charts. No, they're not all the same companies, but they've kind of had the same, huge moves, pull back, over extension to the downside, rebound, over extension back up, and now it's trying to find its footing. And NEO obviously gets helped by Tesla one way or the other, and whether or not we fade from here, who knows? But I want to be prepared that maybe they're just setting a trap under 35, and then they blow through it. But in my eyes, I'm waiting, and I want to participate in this next unwind. I do still feel like the market needs to not crash, but I still do feel like the market needs to consolidate in the 380 range, 380 to 400 range for quite some time. I still am of the mindset that we might be going into a sideways consolidation for a long time, and trading is going to be a little bit different. And you've got to adapt as obviously most of us have already. But I am of the mindset that these still potentially could unwind. And so I'd love to see that on NEO, and I want to participate with that. So I did trade it on Friday. I missed a nice trade into the close as well. But again, the liquidity here is just amazing. So I want to take advantage of the days that it has trend, not every day. Sometimes it's got huge trend, and then it just goes into this consolidation pattern. The sooner that you understand that that's in a channel, the sooner that you understand that it's stuck in that range, the less time you're going to waste, right? We all waste time when it's stuck in that channel. So next is UONEK. By the way, for Plug and FCEL and NEO and all those, the goal there is just higher the better, looking for failed fall through momentum. As you guys know, each and every single scan that I put out every single day, I break it down to main watches, failed follow through, continuation, and then staying familiar. So this is the failed follow through section, which is basically looking for, the goal would be higher, the better, because the higher it goes, the better the opportunity for the failed follow through. And basically I'm looking for it to confirm my thesis, show its hand, show that it's weak, but I don't want to be the first one in. I don't want to be fighting that trend. I want to be part of the trend. So UONEK, UONE, fantastic trades on Friday. We got some great parabolic moves. Then we got a nice squeeze as well. So if we go back and look at the intraday chart here, this I think is a great obvious trade. This was the obvious trade. That's why it squeezed back up like that. Everybody knew that it was a fade. Everybody understood that it was a fade. Everybody understood that the day before was too much, right? So it's obviously easier to say after the fact. And quite honestly, I probably would have had some left when it ramped up like that. Not that it would have mattered, because my average was great. It was from pre-market, and then I had scaled in, and I had also covered. But I was aggressively covering and got out of the position because I had a plan to get out and off desk for the day. So, I took the meat of the move and I moved on. But because of that, it allowed me to reshort after. And if you saw my trades that I had posted, you saw that I did not try to find the top on that parabolic move. I actually let it do its thing, exhaust everybody out, and then join the downtrend. Now, did I miss out on some opportunity because I wasn't aggressive in this area? 100%. But once again, I'm trying to find that perfect balance where I don't need to be super, super aggressive every single day. I don't need the headaches. I don't need to get squeezed. I don't need to go through all those emotions that, so many people do when they're trying to press 24/7. The amount of meat that's out there without doing that, there's just so much right now. There's no need to do that. So I'm trying to continually make that balance better. And because of that, I'm not taking trades like that into the parabolic moves. I'm waiting for them. I'm waiting for all those people to get gray hairs. I don't need any more. I'm letting them get them, and then I come. So UONE, UONEK. The unfortunate part about this is I actually was long across a bunch of different names, and the catalyst was coming into Juneteenth. Last year they all had huge runs, but I guess I missed that Floyd's anniversary, I think, is this week. And so they ended up all going ahead of time. And so I had probably 5% of the position across maybe 8 different names that I wanted to have. So it sucked because I was so prepared and I knew it was going to be a huge home run trade into the summer. I was ready for it, but obviously I wasn't ready enough. So somebody else had an earlier idea. So either way, with that said, there might still be a underlying bid, and so you want to be cautious of that just because there is still that forward-looking catalyst. But that's it. So higher the better. Failed fall through momentum. I think a lot of people will have it off of radar just because the move happened, but I still think you can find a potential 60, 70, 80 cent type fade off of the morning gains. All right, guys, next up is VIAC. It's another one of those popular type names where there's a very large retail shareholder base now after the big unwind. So for me, looking left, looking at the daily chart resistance, we are into some very key levels, and I do think it's going to play a role very, very soon. Whether or not we bust through those levels and break out, or whether or not we reject and give that nice failed follow through opportunity that I am hoping for. So I'm not looking to get in front. I'm not looking to fight it. But what I am looking for is ideally some type of push up towards that 42.80, 43 level, and then potentially unwind. And then also, if you look at the intraday chart, if you're looking at some of this support here, ideally 42 over and under gives us that unwind trade. So I do think that there's going to be a nice 80 cents to $1, maybe $1.50 type unwind potential, especially if we have some type of breakout that ends up failing and then it does the unwind. The next one is going to be AMC. This one everybody loves me for. I compared it the other day to OCGN. OCGN, sometimes, like I was saying with OCGN, this day right over here, sometimes the squeeze day is that breakout day. And although we want higher and higher and higher, and we've seen these low float type stocks break out and do some crazy squeezes, big cap names like this, OCGN and AMC, these are not low float type stocks. So yeah, they can go wild at times, and especially if there's some type of maybe something going on with the options, things like that. But for the most part, I'm not saying that can't happen, because it has. But for the most part, more often than not, it will end up, failing. It's not going to do some type of black swan type event. Now, the opportunity, it's usually something that you have to have holding overnight, right? You've got to be there for it because the next day it gaps down. And that's not something that I like to do. So OCGN was actually a little bit higher pre-market that morning when it unwound, but I was prepared for it, and I was confident in the fact that what I had seen the prior day was basically shorts covering into the sellers, into the longs that had a lot of the size. And as you've got that rotation, that squeeze is actually happening before your eyes, even though you're waiting for the squeeze. And that, I think, is where a lot of the longs went wrong. They're still waiting for that squeeze, but it was happening. And so it literally did the same thing as OCGN. You had that breakout, and on top of that, if you just take one quick look, looking left, how much could that have helped you anticipating this potential resistance level? It's not to say you jump in front of it, but it's safe to assume it's going to have trouble. It's safe to assume that it will fail if it doesn't start to find a new base over that key level. And that's exactly what happened. So for me, higher the better, and ideally it continues to stay heavy to the 11s and the 10s. And, again, sticking with that theme of today, move in, move out, move on, right? So there's probably another day or two of good trades here, and then I'll probably leave it alone because guess what's going to happen? Liquidity is going to dry up. It's going to start to chop around. It's going to take your attention. So you're going to put the blinders on, and you're going to miss all kinds of other trades. So let's jump forward to the continuation section. PTSB, I am long from Thursday. Nice breakout. I added on Friday. Not a sizable position. I wish it was, but I was a little bit late to the trade. But just joined that trend, and great breakout so far. I would love to build it if it starts to consolidate. ADES was an idea on Thursday for dips versus 6. Great breakout, closed around 7 so far. Ideally, that continues to consolidate at a 650, 680 level, and I'd love to build a position if it continues to hold trend. PFMT has been a nice one in the past. If you guys remember this move, participated in that. Starting to set up again. I saw it on Wednesday. I didn't put it on watch. Missed that opportunity, but it's setting up really well. So these are the types that I look back and they're $5, $6, something like that. So I'd love to take advantage of this trade if it starts to consolidate the next couple days. And the last but not least, one that kind of we've seen in the past, it's failed so many times, but it's finally going, is WRAP. And if you take a look, you'll see those wicks that I talk about, right? Each pullback comes back, pullback comes back, pullback comes back, and then it finally breaks out. So at this point, I'm going to be looking for basically any sort of pullback towards 670s, 650s, 670s that holds, and I might start to build a position on that as well. Again, I don't have a position yet. The last part of the section that I don't go over, you can click through to the website and check it out. Staying familiar. These are other charts that, I don't really have a game plan for yet, but I'm going to be setting price alerts. And the way that I set price alerts is I look at the channel that it's stuck in. I want to be alerted when it breaks out of it and when it breaks under it, because that's when I'm going to have an edge. That's when I'm going to have a good trade. So a lot of times the trades that I've been prepared for, I end up missing because I don't set price alerts. So this is kind of my way of saying I know I want to trade this at some point here soon. There's going to be a great trade, but it's my way of not missing them. And don't underestimate the ability or the function, the how good it is to set price alerts and how much more you'll actually see and not miss by just doing that very, very simple adjustment to your trades, or at least preparation. So that's it, guys. That's what I'm prepared for tomorrow. We have our summer sale going on right now. It's going to run through Memorial Day, so check it out. It's in the description if you've been kind of on the fence about joining. If you have any prior questions before joining, reach out to Cam at investorsunderground.com. But as you see every single Sunday, this is the quality of what we do. That we pretty much trade. I trade every single day. Again, if you have any questions, don't hesitate to reach out. Leave a best key takeaway for us to review and for others. Leave a like and appreciate it. And we will see you tomorrow in the room.